What's up, traders? Welcome to today's Equity Empire Chart Analysis session. When most investors are throwing darts, we're looking for clues in the charts. Today we're going to be taking a look at the chart on 10X Genomics, the genomics company, symbol TXG. And when we take a look at the chart, as usual, we're only going to be looking at two things. We're not going to be looking at Ikimochu clouds. We're not going to be looking at MACD. We're not going to be looking at all sorts of different indicators. We're simply going to be looking for the direction of the trend, first of all, and second of all, we're going to be looking for support and resistance levels to see if we could either get a quick bounce trade or maybe we can find a lower entry price for a longer term position. So let's get right into the action. I'm going to change the time frame here real quickly to the daily time frame, and just eyeballing it, you can just notice obviously that we're in an uptrend here, but we also have a series of higher highs. So as the highs are moving from left to right, they're moving higher. The lows, as they're moving from left to right, are also moving higher. So we are in an uptrend currently in TXG. So what I'm going to do next is look for support and resistance levels. And I'm going to change the time frame to see if we can get a little more granularity here. Okay. Now there's a pretty aggressive support level, and I'm just going to draw it for the really aggressive traders who are watching. But this is not necessarily one that I'd be looking for a little greater pullback from my support level. But if you're looking for a really quick bounce off of the from closer to current price, you do have a support level in the 1854 to 1812 price range. Okay, so if we can get this momentum to continue, I'll pull back to the green shade area and bounce off that. Now that's not much of a consolidation there sideways, and I'd like to go closer to the origin of the big explosive move to the upside. Okay, it's a little safer. It might not get back down there, and I'm okay with that. I'm okay with missing more trades, but I generally like to enter positions that have a much greater reward to risk ratio too. So this will be an interesting setup, but it's not going to have the same kind of reward to risk ratio that a lower setup would have. Okay, so what I'm going to do is draw the next support level, and our next support level, there's actually two of them. I'm going to combine two of them here. You got all the way from here in the 1651 all the way down here to 1522. So that's a pretty big range. What I did is I combined this support level with this support level and I called it one level. Okay, so there's a support level if we get a more meaningful pullback to bounce off that. So two support levels there, and there's actually another support level below that. So if we were to break that, there's another one right below it here. Okay, so three support levels to consider for an entry. Now I'm going to go find what is really interesting here is, see that reversal just above 20? Like where did that come from? Why did price stop going up and start going down? Well, the reason it did was because the buyers ran out of buying power and the sellers started to overwhelm the buyers. That's really the only reason that happened. Now, was there a clue that that was going to happen? There sure was. If we go back in time here, we'll notice that there is a resistance level right at the start of the gap down in October 2024. So there's a resistance level I'm going to draw right here. See that? We would chop sideways, and then we gapped all the way down on news in the late part of 2024, and that's exactly where we reversed. So we have to respect this level, this red shaded area, as an area where there are likely to be more sellers if price gets back to that price range. Okay, so now that we've got a good, well-defined resistance level, we've got three support levels to consider, then it's just personal preference. Do you want to go for the aggressive level? Do you want to go for the real conservative level down here? Or do you, when there's a support level in between two levels, I call it the Goldilocks level, not too hot, not too cold, did you want to go for the Goldilocks level? And once again, this is really a combination of two support levels that I just made one level. Okay, so if you were looking for a pullback here, buy with a buy limit order at 1851, protective stop at 1812. You'd be looking for a bounce off that level, head to 2009 or just in front of 2009. Now, if you wanted to construct a trade using the Goldilocks level, you could place a buy limit order right at the top of that level, protective stop just below the bottom part of the green shaded area, and drag your target just in front of that resistance level. And that trade set up right there has got a 2.52 to 1 reward to risk ratio. So in other words, for every $100 worth of risk you would take, you'd have $250 worth of reward potential. Now this upper level has maybe even greater reward to risk, but you're only taking a little bit of risk. The risk is we slice right through it and you get stopped out real quick. Once again, that would be the aggressive entry. What I've done here is I've constructed an entry on the Goldilocks level. So what we'd be looking for this trade to do, I'm going to change the time frame to make it even simpler. We would be looking for TXG to do something like this. I'm going to take this top support level off and show what we would be looking for the second support level. We'd be looking for price to do something like this, to work its way down to that level, bounce off that level, and work its way back up to the resistance level. Okay, so that would be the ideal way this level would play out. If you went for the lower level, you want a little bit lower entry. You'd actually want that level to break to get down to the lower level. And once again, if you had that upper level, you'd be more looking for a quick bounce trade. All right, so those are 3 support levels to consider, and a resistance level for a potential target. Now you don't have to use that resistance level as a target. You could trail your stop. If you get filled on any one of these levels, you can simply trail your stop as it goes higher, and you don't need to use a target. But I'm always aware, number one, aware of where a major resistance level is, and 2, pay respect to it. If it knocked price back down in the past, it's likely that it could occur again. All right, so let's wrap up the session. Hope you enjoyed it. I'll be back with more technical analysis later this week. In the meantime, wishing you all the best of luck in your trading. Wish you a very happy Thanksgiving. We'll see you soon.